Hey everyone, welcome back to the Mark Loeffler Experience. We have another great show for you. We got our good friend Andrew Hines back. You guys liked the last housing market update so much that maybe we're going to make this a regular thing. We'll do this every month as long as Andrew is willing to come on. We'll have him on. So that's what we're doing today. We're doing housing market stats. We're going to go across the country. We're going to talk a little bit about predictions that we're going to make for 2021 and what we think the housing market's going to do there too. Again, all the resources we're going to link down below, and you guys can check those out if you want to drill down more into those stats. A lot of the people watching this video, if you're new to the channel, we're all about wealth building on this channel. So if you're interested in building wealth, definitely subscribe, turn on that notification bell, smash the like button for the YouTube algorithm. The more people who do, the more people who see this. Thanks so much. All right, we want to start with Vancouver.
Might as well start on the West Coast.
All right, we'll start with the left coast. I didn't say that out loud, did I? I mean, basically what we're seeing, I think, across the country is, so sales from October to November have dipped.
For the most part, yeah. I think I was kind of perusing through, and there might be a couple of exceptions to that, but mostly we're seeing sales have started to fall with that seasonal trend. So every year, looking back, it seems that in the colder months, we see sales drop a little bit.
Right. And yet, we're still up year over year for sales. So that whole March, April period when sales basically plummeted, we've caught that all back up. So I think the only year that's been better has been 2016. And that's when they brought in the stress test to cool off the market. So it seems to still be having that same effect.
In terms of recovery, yeah.
The average sales are obviously down, right? Month over month.
Yeah, month over month, we're down just a touch. And I think in Vancouver, one of the things I noted is that the townhouse sales are actually quite a bit up. So you're seeing a softening in the downtown condo market still. So that's still a bit of a buyer's market. But I think it's actually getting to that point where it's nearly going to be an opportunity, just like it's happening in Toronto, where we're seeing a buyer's market, meaning the percentage of listings sold in a month are under 20% in Toronto right now. I believe it's a similar number in Vancouver, so we're seeing that
for the condos, not
for the condos. Yes, not for all. This is just for the condos.
Because I think overall Toronto is like 0.65, and I have the stat here. We'll bring it up.
Yeah, we'll bring them up. We're getting ahead of ourselves here.
I mean, obviously, you're seeing a little bit dip in overall prices in Vancouver too. Now, this is average, right? So, especially in Vancouver, like a big sale can skew that. Like if you get a couple $10 million sales or whatever, right?
Yeah.
So
it's a pretty big roller coaster ride for the year so far in Vancouver.
Yeah. And this is for detached. Again, a 2-bedroom house. Again, I don't know how many are selling. So that's why I take averages out of it. But overall, they're up about 7%.
Yeah, click on the condo there. So just looking at condos there. So for all, we're down about 5%, which isn't out of characteristic for the time of year.
Yeah. And yeah, I mean, so we're talking about like even a year ago. So we're seeing some declines, but like 1-bedrooms and studios in Vancouver are still holding the price. It's actually the bigger units that are losing their value.
The bigger units, yeah. So.
Which is this different? Like it's different in Toronto, right?
Yeah, exactly. Yeah, that's a surprising one because Toronto's going the other way. I think there's still a lot of money that wants to be deployed in Toronto. So I'm surprised to see that happening in Vancouver. What do you attribute that to?
I mean, again, it's truly a landlocked city, right? Like you got an ocean on one side, you got big river, you got mountains, and then you got basically an international border, right? So you can't really, like, where are you going to go?
Yeah.
Right. So if you do actually want to live there, unless you're going to go farther out, and I mean, I don't know if you've ever been there, but traffic is worse than it is actually in Toronto.
Yeah.
So if you want to live, like people are wanting to live there, right? So
well, they do want to live there. So I guess I'm just wondering, here in Ontario, like you say, like there's a lot more places you can go. But I mean, some of the people with more money that were in that $1 million range, are they now putting their money inland? Are they going to Kelowna? Are they going to other towns like that?
And that's probably what's happening. You're seeing that the smaller towns they're getting an uptick, of course.
Well, and you want more space, right? It's that natural thing. So for anyone who didn't catch the last update, we talked a lot about the benefits to living in a condo right now. During this time, with the lockdown, there aren't really a whole lot of benefits because your gym's closed, you can't go to entertainment, there's no sporting. So all the reasons that you had to pay a premium to be downtown, they've been taken away. Yeah. So that's why people want to spread.
And everyone's working from home, and they think they're going to work from home for the foreseeable future.
Yeah.
So if you believe that and you can move, so the 2-bedroom, 3-bedroom condos, they're like, well, we can buy a house now.
Yeah.
And so they go and buy a house, they sell their condo, so that's
Yeah.
putting downward pressure on the bigger units, where the smaller units, they may be more rentals. So people might just be, okay, we're just going to weather the storm, or it's new people coming into the market saying, hey, this might be the opportunity that I need to buy in, because the interest rates are super low. I mean, you can go to HSBC and get less than 1%.
Oh, can you now?
Yeah, HSBC has less than 1%. One of the guys, Josh Doyle, he just got prime minus 1.15.
Yeah, I remember him sharing that. So I mean, in that, just to not breeze over that point, I believe that is a big reason why we're seeing sales up year over year across the board, across Canada. We're really seeing that effect of the interest rates now. I really do think that that's coming in.
Well, that does. I mean, it just lowers your cost of living, right? So it lowers your average cost per month on a house buy. So with that difference in interest rate, even from 1.8 to 9.9, like, it's massive. Like, you can probably go buy like a $50,000 to $100,000 more home because of that interest rate change based on your qualification.
Anecdotally, and we'll move on afterwards. So one of my mortgages on one of my student rentals of $2,500 a month, I used to get like $700 or $800 a month principal pay down, and then the rest was interest. When this drop happened on my variable rate, it just flipped, and now the interest portion is the previous principal portion.
And that's why, honestly, I take variable rates on everything.
Yeah, same here. Yeah, it's great for flexibility.
Yeah. So you see, obviously, inventory is going up, and days on market's going up in the higher price stuff.
Days on market's going up here?
Days on market's going as down across the board for November, or for Vancouver.
Okay, so days on market, that's really showing that we're still a very strong market here. There's more demand relative to the supply here, so that stuff is just not sitting on the market long.
So this is detached. You're seeing what, sales to list. The smaller units, again, looks like it's bidding wars, bigger stuff, And again, anecdotally, that could be one property selling 50%, and it skews that number huge, right? Because there was 22 sold. These things can be skewed huge by one sale.
Yeah, because there's really not that many being included in here. Like, only 244 sales in the one bedrooms.
Yeah.
So they're down a little bit. But I mean, sales to list. Sales to list, they're all doing quite well. Like, days on the market, you can see they're all down here. So I mean, it's just showing that actually condos aren't doing that bad in Vancouver proper.
Yeah, and just anecdotally, I know that in Toronto, there are certain condo buildings that are having bidding wars, whereas others ones like right next door are sitting. So it's just funny how the dynamic of that, like, they're like, this is a specific one I want to be in for whatever reason, or investors. I know a lot of there's investors who are lining up to get into certain ones.
Yeah. Well, I think that just goes to show that regardless of your market, that's that entrepreneurial spirit. Like, there are certain developers, it doesn't matter if you're in up market, down market, they'll find a way to be successful. And those that can market better, that can position their product better, still win. This
is a RE/MAX poll here, or whatever they do, their housing outlook. And what I really find funny about this thing is, I don't know if you've seen this yet or not. I'm kind of throwing it at you. They have like 3 different suburbs. So they have Vancouver North, Vancouver West, Tri-City, they have Vancouver, BC, but they don't include Montreal or anything in Quebec.
Interesting.
I find that RE/MAX being a national or international franchise, but they're leaving out a whole province. They have every other province in here except for Quebec.
Well, and that's one we don't want to gloss over. We definitely want to talk about Montreal because it's been a hot market.
Yeah, but listen, we'll post this up on the screen while you guys are seeing this right now, and this is kind of what they project right now. But you can see basically what I'm highlighting is the difference in price from 2019 to 2020, and the year-over-year change from 2019 to 2020. So you can see that there are some markets that are, obviously down a little bit, not much, but most obviously are seeing huge changes.
Well, our national average, I know it last month, and I didn't get the stat for this month, but it was 17% year over year for the national average.
Yeah.
That's huge. To think, I mean, Canadians' wages did not go up by 17%. No. So there's some major changes happening in our market.
Affordability because of interest rates. Yeah. And they talked about keeping interest rates low until 2030.
Until 2030? I could believe it. I mean, how...
That's what the Fed was talking about.
How could they really afford to increase them, right?
That's right. So, but you just look on here and you see like Windsor, 21%, Winnipeg, 4%. So, I mean, one of the things I look at when I see something like this is like, okay, if I'm going to go into that market, is it overheated? So Windsor. So am I going to see a drop in there? Like Hamilton, 14%. Am I going to see a drop there? Or the other thing is, do I look at like say Edmonton or Calgary and say, is there an opportunity there? Right? Because it's gone up 1%. Basically, they're flat.
Well, they're rebounding too, right? Because Calgary and Edmonton, they lost so much value back like 2017, 2016. Now they're really starting to gain some of that back. They're starting to get some upward
They're
momentum
definitely
back.
a more cyclical market.
Yeah.
But to me, I see that and I say, is that an opportunity? And I'm kind of looking at those markets right now.
I think it is.
And I'm like, ooh, maybe I should be diversifying some of my stuff from there over to here.
So there's a couple of effects that I want to go over here. One is the infrastructure element that exists out in Alberta. I mean, you could take away oil, you could take away industry, but as long as there's infrastructure there and there's services and all different corporations already there, other people and other industries are going to move in. And I see that being the future of Alberta. I really do think that that's going to happen. So it's a question of, at what point are Canadians going to look at these other major cities and say, you know what, I can get so much more in Alberta, let's make the move. So, I mean, of course, we did have a little bit of an exodus from Alberta. A lot of people left earlier this year when things got bad with
oil
the lockdown.
Prices.
Low. But as that rebounds, I mean, I just think that Alberta is going to continue to diversify. So I think that that's an opportunity to come. And I know guys like Russell Westcott are bullish on that. He says it's the best opportunity it's ever been right now. Kind of, I'm paraphrasing, so Russell, sorry if I got that wrong.
He just commented on one of my my posts today, and I was like, "Hey, when are you coming on the channel?" So
yeah, he'll have to fly in, I guess.
Oh, I mean, we can do a Zoom
maybe
for him.
Zoom him in. But here's the other part I wanted to talk about is we look at this exodus from, say, the downtown Toronto condo market because those benefits are gone. We see people moving out of the cities because who wants to be locked down in a condo?
Yep.
At what point, you picture the rock in the pond and the ripples flutter out, they hit the edges and then they start rippling back towards the center.
Well, I mean, obviously we know that people are, and I love this, people are getting jabbed with the vaccine. I don't know if you watched the British news. That's what they were jabbing.
Yeah.
And I was just like, I love it. That's what I'm going to talk about. They're jab. But the vaccine is coming.
Yeah.
Right? I mean, I know my neighbor is an ER doctor. He's getting jabbed this week.
Okay.
So whether you're vaccine or not, whatever, this is happening and things will open up despite what Doug Ford's going to do probably this Friday. When this comes out, he says, I heard he's locking everything down again.
Yeah, he said everything's on the table.
Which again, we're not going to get into that.
Yeah, we'll save that for the next episode.
Because we've talked a bit about that and I don't know if it was last one or previously, but anyways.
Yeah, so I mean, just on that point though, so we see like a city like London, Ontario is doing insane numbers. Is that on here? Just look at the exact number. So we're 17%, right? So that's in line with the national average year over year.
I mean, Niagara is 19%.
These are insane numbers. At what point? So London's been a bull market in the real estate market for a very long time. And it's been hot since 2017, start of the year. Yeah. So at what point is that going to come down? Because we never had that correction that the other markets had in the start of 2017. So, that's where my investments are. I'm curious what's going to happen. I'm patiently watching the market here and kind of seeing, but this is why I look for cash flow, because you just don't know when you're going to see that correction back.
Yeah. And to be honest with you, I mean, we'll talk about my projection, what I think market's going to do next year. And I did correctly call that in March, you should buy property and you have a nice, I said we probably had about a month to 2 month window. And we had a 2 to 3 week window.
Yeah.
Who knew? Maybe everyone took my advice, and I was the cause of that.
Yeah, totally. I think that was it, Mark.
Yeah. But you can see, something like Toronto, they're up 12% year over year, where the national average is 17, right? So I mean, the condo market is
pulling that down.
Yeah. Ottawa above the national average. Cornwall, Ontario, 15%. Collingwood, and obviously the resort markets, the cottage markets, the secondary things, they're all doing well as people can't travel.
Oh yeah, and it's hard to track all of them because there are those more subtle cottage countries that weren't really cottage countries and I just know anecdotally what's happening up in the Bruce Peninsula. People, when they feel like they get to work from home, they wouldn't mind being at the cottage.
Yeah. And
so those who have already bought in are really reaping those benefits now.
Oh, for sure. We had one sell on our lake last fall for like $1,085,000, and I'm like, they're nuts. I felt like my parents, I mean, I would never pay that,
Yeah.
right? And then lo and behold, a year later, and I mean, they look like geniuses. And
Yeah.
again, they're living there full time now, working from home because they live at Yonge and Eglinton, work at a bank,
Yeah.
and they're like, yeah, I can work from here. I'm like,
Yeah, this is why I'm looking for opportunities in those type of markets and keeping my eyes out, because I think that there's just so much money to be made there.
100%. I mean, so in the more northern communities, I mean, they're going up 12%. North Bay, Thunder Bay, 7.4. Out east, you're seeing some price rises, like St. John's, 9%, Moncton, 11, Fredericton, 4.5, Halifax. I mean, they're all seeing it. I think St. John's is probably a little lower just because of oil prices were low, and they do have a lot of the offshore stuff there.
And those markets have traditionally, like a lot of the eastern markets in New Brunswick and Newfoundland, they were slower growth markets anyway. You know, they were a little bit of a slower economy as well. So
yeah, but Halifax is actually, I mean, it's
been booming.
Well, they're diversifying, right? So they're the hub out there basically now, right? That's what they're trying to turn themselves into, or that's what they are turning themselves into. So obviously that's why that's outpacing most of the other areas, and these are so low priced that if you get a $20,000 spike, it's 10%, right?
Yeah. So the people in New Brunswick, this is a pretty crazy thing that's happening right now, because they've really they haven't even paced inflation with their property value growth, and now they're finally seeing it. So there's people I know who have been investing out there for a long time that are getting pleasantly surprised right now with what's happening.
The thing though is, I'm hearing from Halifax investors right now is they didn't have rent control, right? So they could there was something, I don't know if they could layer it in to get people into like to market rents or whatever. I don't really understand the rules. I've never really followed it. But they could buy a property, get the rents up to market price, basically. Whereas in Ontario, we can't do that until it's vacant.
Unless you have it built post 2018.
2018, yes. Whereas out there, so now they've brought in rent control for this, just the short term.
Okay.
I don't believe that ever.
There's nothing more permanent than a temporary government initiative.
Right. So now I'm hearing from investors that they're like, ooh, well, like they're reaching out to us in Ontario saying, how do you guys do it? Right.
Yeah.
So it just creates that little bit of a shift where people will be like, oh, well, maybe I'm not going to buy, maybe I'm not going to rent. And that's what happens here. And that's why we have a shortage of rental units, and demand goes up and rent goes up. Right. So
yeah, we could really correct. There's a couple of things that could really correct the Ontario challenge with housing, and one is make it easier for developers to get approvals, and then the other is make it more enticing. Take away some of these rent controls so we get more housing in the inventory.
Yeah, but I'm specifically Halifax. I know that might cause some kind of ripple, because that just came down in the last month or so.
Yeah, because they're still up month over month. We should pull up those stats, but they're still actually up month to month.
I mean, we've kind of crossed the country here. We've done it really quick.
We've grazed over it.
We've grazed over it.
Yeah.
I mean, we're not going to do a deep dive. I really want to talk to you about 2021, though.
Yeah. Okay.
All right. So what are you thinking for 2021? So there's a couple things. I don't know if you watched the video I did on the mortgage deferral, Cliff.
I didn't see that one, but I've kind of heard some of the conversations. It doesn't seem like that cliff actually exists.
I follow like RBC Economics. I follow some of the rating industry things. So like Fitch. So Fitch is actually calling for, so basically our delinquency or our default rate is like 0.35% right now.
Okay.
So RBC is saying that will double. So it'll go up 100%, which will make good news headlines. Well, what does that actually mean?
Yeah.
If it goes from 0.35% to 0.7%, we're still not even at 1%. Yeah. Like, so
you're saying 1% of all mortgages?
All mortgages. Yeah.
That is pretty devastating for a bank.
0.7.
So it could go to 0.7.
Yeah. Whereas you got to remember that during the housing crash in 2009 in the States, 2008, 2009, 2010, defaults went to like 8%.
Okay, so we're nowhere near that.
So we're nowhere near that. But like RBC is saying that they think it'll go up to 0.5, from 0.35 to 0.5. So almost everybody is saying that there will be some. So and what that does is typically bring more properties onto the market.
So there's so many things to unpack there. Like what demographic, like which houses are the ones that would default? Because most white collar jobs didn't even get laid off. So these people kept their jobs. Maybe you had some of those lower price point buyers that bought in at a $300,000 price point. They were stretching and they could just afford it and they got laid off. Maybe you had some servers, but for the most part, people who work at Starbucks or whatever, I'm not saying Starbucks pays minimum wage, but any job that does pay minimum wage, they weren't the ones that were really in that buyer market. So the ones that were most affected in service industry, I don't have the exact stat, but how many of those were actually homeowners to be in this position?
There are definitely more renters affected by all of this than full-time positions, and we've seen that with the job stats that have come out and that type of thing. This is mainly talking about because of people taking the deferral.
But wouldn't they have just taken it because everybody wants more cash in their pocket? Like I would have hypothetically taken it.
Some people did.
Yeah.
Some people actually obviously needed it.
Sure.
Like I have friends who are in manufacturing jobs and their manufacturing jobs stopped at that time, but they're back at it now. And some of them took a deferral, some of them didn't.
Right.
I mean, everybody that I know is good. They're not going to default on their mortgage. They're not in default. Yet you have that 6 months that comes up right around now or January, depending on when you took it. And then, you're 2 to 3 months to get into that process. And, so in January, February, March, we might see that little bit of spike that people putting on their houses on the market. So as long as they're selling into a hot market, and typically what happens in January for me is I have a whole bunch of people who want to buy homes and there's nothing on the market.
The market's picking up. So and we're so far behind in most of our Canadian markets, like we don't have enough inventory. So even if there is a little bit of a push to add inventory, that's pretty much just going to bring us in line with previous years. Yeah. For how much of an outlier this year has been.
And just anecdotally, this is across the board. So we listed a house. It's a 4-level side split in Burlington. It was an okay house. We listed it for $1 million. We had 10 offers, 11 offers, and it sold for $230,000 over asking. I was involved in trying to buy 42 units in Burlington, and it was listed at stupid low at like $7.2 million. And like I was over $10 million, and there was 44 offers on this property, right? And it sold for more than I had a firm offer closing in a month at over $10 million, $10,500,000.
Wow.
And somebody else blew me out.
Yeah, that's pretty wild.
This is just what's happening in a market. We lost for one of our buyers on 28 offers in Hamilton still. So there's still a lot of demand out there, and especially with interest rates going down further.
So the interest rate part of it, and then I think there was still pent up. I don't think we had enough supply to begin with, and then you add the interest rate effect there, and we've just driven a buyer's market. People have dollars they want to spend. They're getting approved. They're getting pre-approved, but they need to find a place to buy, and we're just seeing that. In a way, I kind of hate that because I love my investment market to be steady and predictable. I don't need these massive spikes.
Yeah. So, I mean, when you talk about like forecasts and stuff like that, Fitch is one of the big 3 ratings firm, which we know if you ever watch The Big Short that they're in bed with with big industry. Yeah. So they forecast it to fall 5%. And that's overall. And it's funny to watch the comments on this because they're like, so Toronto will fall 10% and the rest of the country will go up 5%, right? Yeah. So I just find that funny. So mortgage delinquency may double, right? Then 0.35 to
it's like a pretty small doubling.
Yeah, it's so like our delinquencies right now are so small, and they've always have been. And this is so during 08, 09, that's what I was watching, and I'm like, people are panicking here, and there's a 6-month window to buy here, and some people took advantage of making a heck of a lot of money, and other people didn't. But because our delinquencies were so low, like the banks are like, we can still lend. Like it's they just anecdotally, so they raise their delinquency rates, they're projected, and then they come in way under. And that's why they announced huge profits. And they're announcing less profits right now because of pandemic, because they've raised their delinquency expected rates that may or may not happen.
Yeah, I think that there's a competing factor here that's maybe going to stop us from continuing to grow. But otherwise, I would be bullish on the market. I would assume that we are going to continue to see this type of growth because we have that pent up demand. The money is still cheap. It's the point we're going to hit where it's just out of the reach of the average Canadian. And I'm trying to gauge where that point is. So that's why I'm so interested in smaller markets that were undervalued to begin with, I think that those ones are the ones that are poised for the most growth. It's hard to say, where do we hit a cap in a city like Hamilton, where the average person that lives there just really can't afford it anymore. And that doesn't mean that that stays forever. Now that might mean that people who can't afford Toronto start moving to Hamilton where they can, they push more people out. And that's happening.
That's been happening for years.
It's going to keep happening. So do we, on that note, do you ever expect to see a big spike drop in, say, Hamilton or in Toronto? I mean, Toronto, we saw it in 2017, but now it's sort of recovered that. Do you expect to see that coming in this coming year?
I mean, I think there's going to be a slight drop beginning of the year in condos. I think it's going to come up. I think you're going to be up year over year condo prices.
By the end of next year, up year over year?
I mean, as long as interest rates stay below 1.5%, I just don't see that there's not going to be demand.
Yeah.
I mean, I don't and this is just on the RBC report, what sales to new listings are. And for all you Montreal fans, you guys are at 0.8. So for every 10 houses that list, 8 are selling, which is that's a super seller's market right now. As you can see, Toronto's 0.62, and that the condo market is obviously pulling that down, right? Canada wide, we're 0.75. Yeah. So, some markets, I'm going to tell you that some of the markets, like the smaller markets, you're seeing a high sales to list ratio because Vancouver and Toronto pull that ratio down huge.
Yeah.
So you're probably seeing 0.8 to 0.9 in some of those smaller markets that you've seen the big increases in, right?
Yeah, there's some of the markets I'm looking at, it's just hard to find any listings at all. There's just very, very few listings up.
Hamilton's like that, right? So, I mean, wherever it is, right? So, look.
Well, it's all a question of where are people going to go eventually. See, I do want to take advantage of that Toronto market, condo market opportunity, because it is an opportunity coming. It's when does it hit that critical price where people flock back.
Here's the thing I'm going to say is don't try to time the bottom.
Don't try and time the bottom. No, I agree. So you have to wait for the margin of cash flow you need to feel comfortable, and then move on it.
I know this is the RBC report that we have up on the screen right now. Vaccines are obviously positive news, but uncertainty remains. Who's going to get them? Work from home, all that fun stuff. These are some of the market highlights. Obviously, so some of the, major markets declined. This is sales, right? Not prices. Which again, we expect that. At the beginning of the year, you're going to hear a lot of, it's declined month over month. Yeah. Because January, nobody lists their house. Why? Because we live in Canada and it's freaking cold.
Yeah, no one wants to move in the winter.
It's not even that they want to move. They don't want to go out and
see houses, they
don't want people coming in with wet shoes and all that type of stuff. And
so you're saying we're going to see that across the board in most cities, or are you saying
we're going to see that across the board? Obviously,
minus a few outliers. There are a couple of cities, I think Regina might be one of the ones that I'm trying to remember from my research.
They're probably already in winter. So
they've been in winter for 4 months. So
you have summer there. It's 2 weeks of August, right? So
probably
already in winter. So
they've been in winter for 4 months. So
you have summer there. It's 2 weeks of August, right? So because you go right into mosquito season.
Traditionally, though, with the condos, you never saw that fall drop off or that winter drop off. It just kept going right through, and maybe that's because you're inside a warm condo building to begin with.
Maybe, and honestly, I've only started watching condos these last couple months. They always just annoyed me. So
I've never been a fan of condos, but I do acknowledge why people would live there. I still think, as long as the benefit's gone to living there, I think there is an opportunity, because as soon as the benefit, everything opens back up, the prices are going to come back.
Yeah. What's your 2021 prediction?
I think the markets keep rising. I think we see a lot of small markets go absolutely insane in terms of price point. So cities like Welland, Port Colborne, I think that we're going to see continued aggressive growth in those markets. Again, don't have a crystal ball, but I just see those as very affordable markets. Any market where you're able to buy houses at less than the cost of replacement. So think about, $200 a square foot for the average builder in these markets. If they're not super savvy, if you can buy it for less than $200 a square foot, it's at least worth looking at. And I think that we're going to see markets where that exists go up. So Sudbury, those type of markets, I think we're going to see them go up a lot.
For sure. And for everyone out there who wants Mark's prediction, honestly, I think markets are going to be up overall. I mean, you can't get an interest rate drop like we've gotten. And to be honest with you, this is when we typically see interest rates go up because home sales are lower. So the bank's like, okay. And then during the spring market, they lower the interest rates because they're competing against everyone, right?
Yeah.
So, but now HSBC is throwing the shot across the bow because we were starting to see that tick up a little bit, right? The fixed rate mortgages were starting to tick up. And now HSBC, less than 1%. I mean, I don't know what that's going to do to the overall market, but like, again, people are getting mortgages at 1.15%. Like I'm hearing about other people doing it. I haven't done it myself personally yet. And it's just like, that can't not
have an effect on
have
prices.
an effect, right? Because if you were getting 1.8 and you thought that was free money, like less than 1% is truly free money. Yeah. Like, and I said at 1.8%, I'm like, how much lower could they go? I'm like, and then they went to 1.5. And now you're seeing 1.15, and you're seeing less than 1%. Like,
so it's actually less than inflation. Like you're actually sort of getting paid to borrow money.
Well, listen, if you can lock it, and I mean, we could talk inflation all day long, but if you can lock in 5-year money at less than 1%, if you could lock in 10-year money at less than 1.5%, I mean, you're probably going to go do that, right? Yeah. If you're not going to be refinancing the thing the whole time, right? Yeah. It's just, I don't see how the market's going to down. And I know why, like the rating agencies and banks, and I still don't know what CMHC is up to, but I don't understand why they put out these projections because they're covering their worst side scenario.
Yeah. And I got to agree with you. I do think it's an overall market increase, but particularly with the focus on the smaller markets, the more affordable markets.
Right. So if you guys are out there waiting for a deal, the deal might be right now.
Absolutely.
So I don't know that we're going to see the crash. The great crash.
Yeah, no, you got to stick to your fundamentals. No one can predict this, but look for markets that fit your fundamentals and stick with those. Never compromise on your fundamentals.
Good.
Cool, Mark.
All right. Well, thanks so much, Andrew. If you guys like Andrew being on the show, make sure you smash the like button. If we get 200 likes on this video, we'll definitely have him back. If any less than that, we'll see. So comment down below what your guys' thoughts, what you think 2021 will bring, and we'll see you in the next one. Have a great weekend.